So hi, Shaun. Thanks very much for being with us today.
No problem, my pleasure.
We'll start off. Could you give us a little bit of background about your background in the classifieds industry and a little bit about what it is that Frontier Digital Ventures does?
Yeah, so I'm a tick over 20 years now in online classifieds, or marketplaces as they're now called. Spent about 8 years at the REA Group, was GM of the Australian business, and then looked after some of the international businesses that the group had acquired. CEO of the iProperty Group, which is a group of property verticals in Southeast Asia. Been on the board of public companies like iCar, which is a group of automotive sites in Southeast Asia again. Based today in Kuala Lumpur, have invested in, lost count of the number of classifieds businesses mainly in emerging markets, everywhere from Brazil to the Middle East and in between. And then sort of about 6 years ago, we started FDV. FDV really set out to identify early stage market leaders, particularly in property and cars in frontier/emerging markets. Our thesis was a little bit different in that we didn't want to go in from day one of an early stage business and buy 100% of it. We really thought that investing in the entrepreneurs who'd started the businesses, the local entrepreneurs, investing in them, often taking a minority stake in an early stage business, given the risk that's involved, really then to act more as a strategic partner than an investor, like a fund. And we'd work very closely with the founders. And then over time, our ambition is to acquire more of those, or greater stake in those businesses that we've invested in, through to acquiring, up to 100% of them. And more recently, the new deals that we've done have been for more established businesses, and consequently, we've acquired 100% of them rather than a minority stake. So our business today sort of started off behaving like a fund, emerged or evolved as we'd always planned it to be, to ultimately being more of an operator. And we now have larger stakes in all of the portfolio companies that we've invested in originally. And as I said, the last 5 deals we've done have all taken us to 100% of companies. Okay,
and it's a kind of an obvious question, but I'm asking everybody: how have the past 12 months been for FDV?
Well, if you'd asked us bang on 12 months ago what we thought the next 12 months would be like, I'm not sure anyone could have even got near the answer to that. Certainly last April, we thought that the world had stopped spinning and it was pretty bleak. As it happened, we really used the opportunity through COVID to, particularly in sort of April, May, June, to really, for the first time in the life of most of our portfolio companies, really forensically examine costs that are in businesses, which you don't get a chance to do. We were able to do that, and you find out that you can actually run these businesses far leaner than you first thought. So that was number one. Once we got through that period, we found that the second half of last year, consumers started to return and everyone was using digital services. So we found traffic to our portfolio companies, to their sites, bounced back really strongly. We also found that market leaders became stronger. So if you're a number one, if you're an incumbent, you actually tended to benefit from what was a flight to safety in many markets. If you're a number 3 or 4, it's a real struggle. And then, of course, we've noted that there's been a sustained increase in consumer traffic to the sites, which is, I think, a systemic or change in consumer behaviour. And of course, in online marketplaces, that means a greater preparedness for consumers to want to do more than just look for a house or a car or general goods. It means that they're increasingly wanted to do a greater chunk of the transaction when they actually find the property, house or other item that they're looking for. And for us, that added up to a pretty good year in the end. And right through it, Edmund, we were able to go buy some more companies, which was great. And we were able to raise quite a large sum of money, and found that we had a lot of investor support for our model, which we think sort of demonstrated its validity through COVID, and local management teams being able to move really quickly and make the most of what was a tough situation. So we probably finished the year quite well, certainly better than we thought we were going to finish it the year back in March and April of last year.
Okay, you touched on it a bit there, and it's something that we're always talking about, getting into the transaction. You guys obviously invest in emerging up and coming markets. But having said that, is a path towards getting into the transaction something that you guys look for when you invest in these companies? Or is it the case that in these emerging markets, you're not necessarily focused on it to begin with? You're more interested in, let's say, the people, the founders that you're investing in?
Look, under either scenario, the founders and the people and the DNA of the business is still important. I think in emerging markets, you, in a lot of instances, have one clear market leader. And in emerging markets, trust remains a valuable commodity in which to deal with. And typically, a market leader will be the most trusted brand. So if you can invest in a market leader, that's great, because you automatically have the advantage of the brand being known, number one, and trusted. And if you want to then, get in the direction of the facilitation of transactions, and I think that's an important distinction. We're not suggesting that the portals do the whole transaction in every single case. It's going to be market by market, and you can facilitate that transaction to varying degrees. But I think if you're going to go down that path, you want a really good brand. And that's a tremendous starting point, because we know that the most valuable thing in these businesses is still your audience. And that's, if you're running a pure transaction business, that's a really hard thing to build and accumulate. So, the old-fashioned classifieds market leaders, they do have audience, and that's extremely valuable. Certainly, the recent acquisitions we've made have all been done because each business was a market leader. It had, each of them has a known and trusted brand. Each of them has a ton of consumer traffic. So if you want to evolve those, let's call them 1.0 classifieds businesses, into businesses that can do more, that can facilitate transactions to varying degrees, having a sizable, substantive and loyal consumer audience every month is a great starting point. So yeah, we're advocates of the transaction. It's going to work differently market to market, but there are some fundamentals that predicate its success, and that is often a trusted, popular brand that people go to with a preparedness to buy and sell.
Okay, so one thing I was a bit interested in is, let's say I am one of these companies that is the market leader in my own market. Why is it that I would want to partner with you guys? Give me the pitch.
You're running a business? Well, I mean, a lot of entrepreneurs are very good at building businesses. That's what they do. That's where their talent is. They often build them and have a very sort of cause and effect relationship with the business. They take a bit of action here, and it results in an improvement or a measurable outcome in the business. They generally get the business to the point where it's a market leader. They might be 3 or 4 years into their journey, and they realize that there's a heck of a lot of value that they could potentially create. Often they are fairly isolated in being the biggest portal in the market. It might be in an ecosystem that's of limited size. So they often look for someone who can help them grow the business and give them, the metaphorical handbook on how to move through the classifieds model, and then how to, test the water on transactions and which version to do it, what steps to take. And often it's as much about avoiding mistakes as making good decisions. You can narrow the priorities that a business might have into being, a set of steps that make sense. So if you're an entrepreneur, you might have a partner, you get to the point where the business could potentially be large. It's good to have someone who's been there, that walked in your shoes, done it a few times successfully as a partner. And we can provide operators with capital. We can provide them with strategy assistance. We can provide them with, execution help. And that's a pretty compelling proposition if you're running a business like this in an emerging market where it's not easy. Like, it's not an easy thing to do. So you want to get it right. And, we often talk about, how do you sort of build a successful business or a successful model? And there's probably 5 or 6 things that if you get them all right at the same time, it all clicks together, you can have a really great business. And we like to help entrepreneurs identify those 5 or 6 things and put them together and grow their business with them.
So I think you kind of touched on it there, but since starting to really look at the classifieds industry as, I guess, a newcomer or an outsider recently, it has been interesting to me to see that there are those, as you mentioned, 5 or 6 elements that are kind of common throughout all markets. And one question that I had for you going through this the other day was, are there any countries out there that maybe still don't quite have the semblance of what we'd look at as a normal classifieds industry with foreign investment? And where do you see the biggest untapped potential in the world at the moment? Is there a specific region, or is it kind of difficult to tell?
There's some, you try to be a little agnostic in terms of a region per se and find good markets. And there's still markets out there that we think are good, but have, barriers that prevent them from perhaps, being good opportunities. And that can be foreign investment barriers. It can be local laws. It can be, infrastructure barriers. It can be the way the industry operates. So again, trying to get all of those pieces together doesn't happen all the time. There's a number of markets out there that are probably deficient in 1 or 2 of them, and that makes them less attractive. In terms of regions for us, we see a lot of potential in the LATAM markets. We think that, our mandate is not to be everywhere, but to be in the best markets with the best businesses. And we think that there's a lot of opportunity in the LATAM markets. There's a real dynamism there. There's a fairly well-structured sort of industry, and there's some really good operators, and we see a lot of growth and potential there. Equally, I'll say Asia. It's a region and it's a big place, but sort of parts of, Asia have been really good as well. And not all the obvious places. Pakistan's not one that people would have high on their list, but that's been really good for us. And markets like Philippines, we've been in and out of Vietnam, but it's not all straightforward, is it? Because, we have 2 really good businesses in Myanmar, for example, at the moment. And, that's a risk that emerging markets have, as things don't go as you would hope. Certainly for, our team in Myanmar, it's been a really tough time. So doesn't always go to plan, but, Asia generally has been a really dynamic region. And we often think of this region, and we're based in Kuala Lumpur, of just about every market in this region is wealthier, better off in a fairly significant way than it was a generation or 2 ago. So the whole region's got better. They're the 2 key regions for us, LATAM and parts of Asia. Developing Asia, I guess we call it.
Okay. The next question I had for you was, how does being a public company benefit you guys? Because there are other companies out there that do similar things to what FDV does, maybe not on the same scale, that are not publicly listed. Am I right in thinking you were publicly listed pretty much from the start?
Near enough too. And I think, I'm flattered that there are other examples emulating the FDV model. And that just means I think we're onto something fairly early. We started the company in sort of 2014 and we listed in 2016. We listed because, for a number of reasons. One, because we had a really great track record in the public market. So I'd run public companies for, the previous 15 years. And through the iProperty Group, which was publicly listed, we delivered shareholders a tremendous return. And investors are pretty smart, and they like to follow success. And when we started Frontier, many of them followed out of iProperty and into Frontier. So we had a really strong quorum of sophisticated investors who understood what we did. They trusted us. They believed in what we were talking about then, and it made a path to an IPO plausible. And it's not, an IPO is not something you can, walk up to a counter and purchase. You've got to, you've got to put a lot of things together to make those things happen. And reputation is one of them, and that was hard earned for us. And when we looked at doing this model in emerging markets, one of the risks or the knocks on it is, they're risky, and how will we know what's going on? So, to be listed is probably the gold standard in governance and structure. So we wanted to give our investors the highest possible standard of an investment vehicle that they could get a really good sense of transparency and look through into. Their stock's tradable. And for us, it was a much more expeditious path to raising capital. If you've raised, and anyone who knows the industry will know that raising capital in private markets, it's pretty torturous. I don't think anyone goes out there and enjoys it. The benefit of being public is you can raise capital, and it's a very defined process, and it's a fairly sophisticated, well-worn path. So for us, the advantages were many. The trade-off is we report everything we do, and that is often it's a bit of a pain, to be honest, but it is the trade-off of the advantages that we believe are there by being listed. And people can trade in our stock. We're priced every day, and that makes for a very transparent and well-structured vehicle for investors to access high growth markets, which are emerging markets, and we de-risk it for them.
Okay, yeah, fair enough. Last question from me. It's a deliberately open-ended question. Where do you see the next 12 to 18 months of, let's say, investment in the classifieds industry going? Is there going to be a trend, do you think, towards more of these emerging markets as we see internet penetration growing? Is there going to be a trend towards specifically transactional businesses? How do you see it?
Oh, gee, it's a tough one because, in a lot of countries, money's free. Interest rates, I think, in some countries are under 1%. So this is an unprecedented period where capital is available pretty freely. It's actually readily available. So a lot of capital trying to find a home. And I think what happened during COVID was businesses were put in one of two categories: those that were able to trade well through COVID and had good governance, had good structures, were well funded, and were break even. They kind of got put in the good company category. And you probably had a bunch of companies that just survived COVID, and they probably unfortunately got put in the not so good companies. So I think you'll see a lot of money go to those companies that demonstrated a really strong record through COVID, because people want some security. Equally, this explosion in prop tech, this term that's been freely bandied around now, which seems to cover everything involved in buying and selling of houses that involves technology, and equally with cars. So you're seeing a lot of money go toward people trying to crack the nut on, how do I make the purchase of a house or a car faster, easier, less friction, and, arguably more transparently, but that remains to be seen. So I think you'll see early seed and VC money go in that direction. Obviously, funds, equity funds, or private equity are going to enjoy investing in the companies that traded well through COVID and are a bit bigger and probably profitable, and they'll get a lot of capital as well. But I think the same fundamentals apply. You've got to have a really attractive market. You've got to have a scalable solution to a genuine problem that consumers or face when they're buying houses or cars or other, and advertisers can benefit from. And I think if you have that, whether you're doing a 1.0 model or a transaction focused model, there's funding out there, that's for sure.
Nice one. Okay, well, thanks very much for talking to us today, Shaun. I will be following FDV closely, and I look forward to maybe meeting you at an event in person in the not too distant future.
I hope so. Cheers, mate. It's been a pleasure.
Nice one. Thank you.